3, 2, 1, Saturday morning. SMF Pro trading students are live in action, and their main focus is to take a look at the weekly Google chart in comparison to the next chart, which will be the Amazon weekly chart. And what is the relevance in the trends? Why is one healthier and one is weaker? So let's start with the Google trend, and when I'm done with this chart, and here's our logo. You can always join us right here at www.stockmarketfunding.com, home to the trader and investor alike. People around the world, international traders, Costa Rican traders, you're welcome to join it. Now, let's take a look here. On the weekly bar, people, let's start out with half of the SMF weekly Pro Trader bar. We had a double week breakout to the high, and we had a gap down week the following week, and we've come all the way back, and we've tested half of the SMF weekly bar. Now, be advised that in weekly trends is the blue line is a 10-week simple moving average. And what has happened here is the reason why that 2-week breakout failed was for one reason: the declining weekly moving average. If I'm declining mathematically in the number of that weekly moving average, that means that that breakout is going to fail. And it also means that it's a tradable instrument for a profit only. And that I will show you an example of the weekly moving average, is that the qualifier is that back in the bear market, Google closed above the 10-week moving average 4 consecutive weeks, and then it came down. Then it had a double qualifier. And the 10-week moving average is going up the mountain. It's walking up that great hill. And as it does walk up the great hill, the equity price is going higher and higher and higher with that 10-week moving average. Now, back over here at the peak, when Google fell, that 10-week moving average started to slope downward and has ever since. We are finally getting to a point where when that 10-week starts to flatten out, that means that the support level here is going to be much stronger, much more robust per se. And the whole thing about this is that I want you to be aware of how we would go back into a bull trend and what that would take. What it would take is a 10-week would flatten out. It would start to ascend upward mathematically. And I designed mathematical formulas between the 10-week and the 20-week. You hear me? So I want people to know that. So when this moving average, that weekly moving average, flattens out, that means that this particular support level is going to be robust, because you're no longer declining in the weekly moving average, not going down. When a weekly moving average or a daily moving average or a minute period moving average is going down, that's why you're always selling short up here, because that moving average, that trend is not sustainable. Yeah, it was a 2-week breakout failure because of the 10-week declining moving average. So when we flatten out here and we got to close, not only do you have to flatten out, you have to have 4-week closing price above the 10-week moving average. Okay? That means that that's got to get flat and it's got to turn upward, and you have to have 4 consecutive weeks closing price above the 10-week moving average. When the 10-week moving average starts to roll up, that means going upward or ascending, not descending as it is now, but ascending. That means that Google is going to set up a base, and the firmer that it gets and the more turnaround we get throughout this year with this 10-week moving average, we potentially are going to break that top up there. And as a master trader on Google, you can literally trade Google, and that will pay for your whole Costa Rica trip. This trade. And it's got a process to go through. So, declining weekly moving averages, you trade the bottom, you sell, you get short because of it. But when we flatten out and we start to consolidate weekly above that and it flattens out, it's going to be a strong trend. And the other thing about this particular weekly chart is that when Google was overbought on the MACD here, it's come all the way down. And when we were overbought, we were like right here. We were 96% DS. That means we were so overbought that Google had to come down. Didn't matter how great of a company is. Didn't matter how great the fundamentals are. It had to come down. Now, when we got down here on a weekly level, we got down here to 16.33. That's quite different. That means that Google's going to put in a bottom here. And that weekly moving average turns, it's going to be a consolidation. And as it turns and once it flattens out, then we're going to get net long the $600 call. Not until that happens. Because what we're going to do is that we have earnings seasons coming up in April. And I can tell you that from the January quarter to the April quarter is that they're going to give this thing all kinds of love this next quarter. And even though that we believe in everything that we know and that we're good at what we know, is that once we do get in the trade, once the indicators work themselves out, we're going to buy it. Then once it goes way up, we're going to go right back down here at the bottom and buy a put option against that gain. Just in case there's any hanky-panky or a drop, is that we're going to maintain that gain by being on the lower end short versus where we break out to these highs. So I'm going to stop this tape and name it. It's working with a weekly chart and that weekly moving average. The bullish thing about it is that the 20-week, which is more predominant, has not gone down in price. It's still rising. Even with the downtrend, it's not rolled over like the blue line, the 10-week. That's the bullish thing. So that tells me that we're gonna that 10-week is going to come up behind that weekly bar, and 4 weeks above it would say that we are coming out of its bear cycle into a new bull cycle. And that's the gift of this particular chart and Google.